Aditya Kondawar, partner and vice president at Complete Circle Capital, joins in on the show right now to talk about exactly that. Aditya, hi, morning. Great to have you on ET Now. Let's first talk about LG. We were chatting with experts yesterday as well. Marquee anchor book, the subscriptions on day one as well are looking quite robust. Do you still apply into LG?
Tamanna, very good morning to you and all your viewers. I mean, LG IPO is very important in the context of 2025 because I think after Tata Capital, this is going to be the biggest IPO of this year. And I mean, of course, LG is a very strong household name. They are very well diversified across a lot of categories. You know, they're into fridge, they're into ACs, uh, they're into water purifiers, they're into TVs, right? So when you actually compare this company to all its listed peers, I mean, LG is the only company that stands out in terms of their product suite, uh, their premium offerings, and of course, I mean, we will obviously get to the numbers and the market shares later on. But then, right now, looking at the whole picture, I think LG looks like a good company.
Right. Aditya, this is Aisha here, and you're on ET Now, and Harsh is our new joinee. I just thought I'll update you on the recent developments. Harsh, any question for Aditya?
Yes. Hi, Aditya. Morning. So, Aditya, talk to us about how LG looks relative to some of the other peers, and you've done this broad brush. You've taken out the numbers. Profit growth in comparison to some of the others versus revenue growth is far stronger given the drive up of EBITDA. Talk to us about sustainability of that and comparability of valuations versus peers.
Sure. So Harsh, good to see you at ET now. Coming to the peers, like you rightly said, the revenue, operating profit, and the PAT growth has been the strongest amongst all of its listed peers. But then, I have just delved further into it. When you actually look at the cash flow generation and the free cash flow generation, right? LG scored strongly on that front too. So to give you a revenue and profit growth sense, LG has done 8% CAGR in its revenue, and if I talk about PAT, then it has done an upwards of 20% in their profit. Now, the only player that comes close to them in terms of PAT growth is your Blue Star and your Symphony. Okay, and if I have to talk about the product suite, LG is the only company which has a very diversified base of products. Now, the problem, Harsh, with all of these consumer durable companies is that they are extremely cyclical in nature. So, for example, since we had a very early monsoon and a prolonged monsoon this time, which meant a short summer, a lot of these ACU stocks corrected heavily. Blue Star, Voltas, Symphony, etc., etc. Now, delving deeper, if I look at the free cash flow generation, and if I look at the operating profit to cash flow conversion, right? Then again, LG converts 77% of its operating profit to cash flows. And now, if I go a step further and I look at the free cash flow generation, then LG converts almost 80% of its cash flow from operations into free cash flow. So, number one, their profit growth has been good. Number two, their cash flow generation has been strong. And number three, their free cash flow generation has been the best amongst its peers. Now, what that means is that the company doesn't really need to rely on external borrowings or other forms of capital raising, such as equity, right? Now, if you look at peers such as say Blue Star or Voltas, you would see that their working capital is a bit stretched, and some companies like a company like Blue Star, they don't have any free cash flow in the last 4 years. And now coming to the valuations, see LG. If I take the FY25 EPS, the company is demanding a valuation of 35 times its EPS. But if I just apply a simple 10% EPS growth of on FY25, the company is coming closer to 31, 32 times. Now, its peers are trading at anywhere from 40 to 80 times, right? But again, I have to tell everybody over here that number one, LG has the least cyclicality because only 15 or 20% of its revenue comes from ACs, whereas for companies like Blue Star or Voltas, it is as high as 40-50%. Number two, if a downturn is to come in this sector, right, then LG will be the least affected. Number three, the company's balance sheet is strong. It is a debt-free company. It has a healthy cash balance on its books. And number four, it has a lot of growth capital on its balance sheet, right? So it doesn't need to ideally rely on external capital. So all in all, I think amongst the peers, it is very strongly placed, given its balance sheet, given its operating profit margins, and
Got it.
given its cash flow conversion.
Got it. Aditya, out of time actually on this one. So thanks so much for coming in, giving us that perspective. And of course, for viewers, this would be great perspective on whether you should subscribe or not. I hope that's given you actionable insights into whether you should go ahead and subscribe. Thanks, Aditya, for coming in and speaking.